Hi, today we're going to talk about forwards and futures. Before we start discussing forward and future, there's another umbrella term called forward commitment, which is used for all three type of contracts: forward, futures, and swaps. However, the forward contract are OTC contract, over the counter contract. As part of this contract, one party agrees to buy an asset from another party at some future time based on some fixed price and agreed upon terms and conditions. The party which wants to buy the asset at future times called long, and the party who wants to sell the asset at in some time in future is called short party, and the future date, when is it this actually transaction will be happening, is called maturity date. So when these contract mature, at that point, uh, if the asset prices are greater than contract price, at this case in this case it's more beneficial for the long party, because long party can receive the actual delivery of the asset at lower price, or mostly these contracts are settled in cash, so he will get paid for the difference between the contract price and the current price at that future date. Vice versa, if the asset price is less than the forward price, then short party receives the payment from the long party. Now we talk about future contract. So the future contracts are traded on exchange. They are not OTC contract. Similar to forward contract, as there's a party, long party wants to buy an asset from the short party at a future date at a fixed price. And what makes a future contract different from forward contract? Because it there's an exchange involved in middle, and these are exchange traded instruments, and the credit risk is really less, because and they are really heavily regulated. And the future contracts, they are margin requirements. So the party who are involved in future contract, they have to put down the initial margin to start the trade, and they also have to maintain the maintenance margin to meet any shortfall during the transaction. So margin calls are triggered in case there are shortage of funds in the margin accounts. So that's pretty much it. Thank you.